This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
And then when using this annual exemption, make sure you use your annual exemption for the current year first and then use the brought forward afterwards. Okay, now there is a further restriction for high income individuals. That 40,000 is gradually reduced for individuals with high income. Now the adjusted income is the net income plus any employee contributions to occupational schemes which have been deducted in calculating net income plus any employer contributions into that fund. Now where adjusted income exceeds 240,000, the annual allowance is reduced by the adjusted income minus 240,000 at 50% or halved, and the current annual exemption cannot go below 4,000. Okay, and with all of these rules, that's the rule. You will never be asked to write these rules out for pensions. Normally in the multiple choice questions for pensions, it's all about calculations. And I would suggest it's more of a minor topic than that some of the major topics that we have covered. Doesn't say it's not important, I just said it was minor in comparison with some of the others. So for the year 23-24, Juliet had a trade profit of 286. Ring alarm bells over the 240. Never previously been a member of the pension scheme. So her tapered allowance is 17,000. Now how did we get to that? So the rule, we like a rule, is the annual allowance minus the adjusted income less 240,000 times 50%. That's the rule. And sometimes it's easier to learn the rule than the bits that are above this illustration. So you could write that out, log it in here. And then you simply put the numbers in. So the annual allowance is 40,000. That's her adjusted income from the question. That's the limit which you have to remember, and divide that by 2, which will bring you to 17,000. So you can see that being a multiple choice question quite clearly. So if you are asked to do a calculation in the exam, as in everything that I've told you before, write down the rule, apply the rule, and show all the workings. All of those workings are going to get you marks. So example number 1. Aston made the following gross amounts of contribution into the pension scheme. 21-22, 62,000. 22-23 was 30,000, and 23-24 was 25,000, and he has an annual salary of 120,000. Calculate the total pension input allowed, i.e. to get full tax relief for 23-24. So let's have a look how that would work. So the total pension input, we've given it a heading so that you know what you're doing, so the marker knows what you're doing. So the AA for 23-24, which we always put in first. Unused brought forward. What I would do is I would write down the years. So we've got 21-22, 22-23, 23-24. So let's go back to the question. So in 21-22 he used that in full, didn't he? So there is nothing that we can bring forward there. Back to the notes, we've got 10 there and we've got 15 there. 10 there and 15 there, which is 65,000, which is the total pension that he's allowed to put in in the form, and obviously he's got the maximum amount of net relevant earnings to cover that. Okay, so moving swiftly along. Now, what happens if you put in too much? So if you put in too much, then you will be given an annual allowance charge. So excess contributions are taxed as if they were extra income received. It's taxed after dividends at non-savings rate, so it's top sliced. And it's added to your income tax liability. So excess contributions suffer tax. Those that fit into the unused basic rate at 20%, if you're high rate at 40%, an additional rate at 45%. So let's have a look at illustration number 3. For 23-24, Francis had trading profits of 97,500 and made gross pension contributions of 45,000. He doesn't have any brought forward, and no brought forwards. Okay, so we're just looking at this 1 year. So we have trade profits less the personal allowance, which is 84,930. Now let's have a look at the situation. So the pension contribution that he made extends the basic rate band, which means that £82,700 of income is taxed at 20%. So then he moves into high rate. So the balance of this, the 84,930 minus the 82,700, which is taxed at basic rate, is now taxed at high rate. So that's where you would have come to normally. Now, he's only allowed an annual allowance of 40,000 because he doesn't have any allowances brought forward. Therefore, 5,000 will be his annual allowance charge. And you see how it's labelled there? And that's taxed at high rate and added to his liability. So although he's got the relevant earnings, because he earns £97,500, that situation here is the fact that he'd only got an annual allowance of 40,000, and obviously he's clearly below the 240 limit for that. Okay. Now there is a lifetime allowance that you're allowed to put in. Basically, you just need to remember what it is. There are no calculations in this exam for this, thank goodness. And they're unlikely to ask you any questions that arise at that point.